Good day, my name is Dean Crocker. I'm an equity analyst with the PSG Wealth team, and today I'll be taking you through our latest EIA completed on Mondi. So Mondi released their first half results for the full year 21 on the 5th of August. In terms of executive summary, the results were a bit weaker than expected in terms of EBITDA level. This was despite them achieving a 5% increase in revenue off the back of a higher realized selling prices, as well as an improvement in volume sold. It was really offset by a 6.3% increase in the relative costs. This was largely due to inflationary pressures, as well as some planned maintenance expenditure. In terms of underlying earnings per share, that was down 3.2% at 70.7 euro cents. But pleasingly, the operating cash flow, despite only being down 3.9%, resulted in a dividend increasing by 5.3%. The net debt did, however, increase slightly by 1.7% on the back of that increase in the capital expenditure of the business. But however, it is worth noting that the group has spent a bit of time on the balance sheet restructuring and has improved the risk of their balance sheet by de-gearing it and extending the repayment periods of the debt over longer term. Relative to the previous recommendation, we have downgraded our recommendation from overweight to neutral. And this is really just on the back of the fact that, Mondi is a fantastic company. We really like them. They've got a strong balance sheet, niche product market. They're benefiting from lockdowns in terms of their packaging solutions. They just do look a bit expensive at the moment. And unfortunately, that is just the downfall in terms of this recommendation, which is why we've led them to a neutral position. We do expect some margin pressure in the near future as the business does seem less able to pass on the full cost inflationary pressures that they have seen. So we do expect to see some margin pressure there. So just running through the event, as I mentioned, they released their first half results. It was, in terms of their earnings, a bit lower than expected, down 1% on diluted basis, despite the improvement in volumes and higher realized prices. Operating cash flow was a bit lower, but however, the dividend did increase by 5%, which is great to see. The group did complete the acquisition of, and I can never pronounce this, Almukasan. It's a Turkish corrugated company, as well as upgrading the Kupoi container mill in Finland. That also, just on the back of that, did lead to that increase in the net debt position. In terms of the results, they were relatively flat. Relative to consensus expectations on the last set of updated consensus numbers, they did beat all expectations across the board, however. It did just highlight the fact that the business was probably in a period where the cost and pressure, as well as that higher maintenance costs, which were planned, just offset everything that they generated on the top line. Thus, the results were flat in nature. In terms of the impacts on data release, the market reacted favorably to the results. The share price did outperform relative to the JSE capped. However, since the beginning of the year, the group has also outperformed by 3.7%. Since our last recommendation in August 2020, which was on overweight, the group has, however, declined by 3.62%. In terms of the year-to-date return, we currently stand at 21.3%, highlighting the strength of this business. So in terms of the assessment, Mondi really did benefit from a lot of the lockdown scenarios, particularly given that the e-commerce business, not theirs per se, but global e-commerce has grown significantly, resulting in a lot of packages, and they benefited from that. Industrial businesses also start to ramp up, so they are seeing a bit of benefit coming through from that and some increase in volumes. We do, however, see that the business is unable to pass on the full impact of the cost inflation. We therefore do expect to see some margin squeeze in the near future. The group is expected to increase their volumes on the back of the stronger e-commerce business, as well as there's a level of lockdown still occurring around the world. So e-commerce business are really performing well, and the demand for Mondi's products will remain high during these times. In terms of the capital intensity, the business is capital intense. They do require quite a bit of capital in terms of their mills, a lot of property, plant equipment, and this came through in the last set of results, which resulted in a really marginal increase in the net debt position. It is worth noting, however, that the balance sheet has been de-geared to a large extent with the pushing out of a lot of their future repayments or their debt repayments. They also raised a nice 300 million euro facility, which has supported a lot of the near-term capital requirements. Cash flow from operations were slightly lower, unfortunately, but I think that's largely due to the fact that there were some cost inflationary pressures that we're not able to pass on 100% to consumers. The group has, however, outlined various cost optimization initiatives. They also did declare their MAD 30, if I remember correctly the name, which is just their outlining of, or their MAPS 2030, apologies. They're just outlining their commitment to reducing their Scope 1 and Scope 2 emissions by 34% by 2025 and 72% by 2050. So in terms of the assessment, Mondi is a really solid company. Great balance sheet, good operations, they're well run, they are efficient, they're in a niche offering, niche product market, and their products have been in demand of late given the various lockdowns around the world. It just does, however, feel and does appear that all of this has been accounted for in the share price, and as such it just seems that they are trading at a premium right now to what their historical values were, as well as a premium to their peers. And as such, the group does seem fairly priced, if not slightly expensive, but we would like exposure to these guys, so very much we have just reduced our recommendation from an overweight to a neutral position. Should you like to place a trade, please speak to either your financial advisor, alternatively the trading desk will be more than happy to assist. Please take note of the disclaimer and have a great day further.